Everyone. Kurt Berry with Stillwater Financial, working with 10X Prosperity, bringing you education on how finances work. Today, we wanted to bring you a concept of looking at your auto and home insurance and how people typically structure their auto home insurance, but some ways that maybe we can structure it a little bit more efficiently in order to give you more protection and more benefits. So we're going to kind of start to look at what we typically see people doing with their auto and home insurance and give you some strategies on what you might think about doing differently that could be in your advantage. So I'm just going to kind of walk through this story that we share with our clients. So if you have your auto or your home insurance declaration pages you get from your insurance company, you may want to pull those out as you watch this, and you can kind of walk through this with us. I'm just going to show you a sample of what we typically see people doing. Now, you may have more or less than what we're going to show of coverage, but at least you'll get a general idea, and you can start to walk through and learn with us as we go. So the first thing that I'm going to talk about is what's called the bodily liability portion of your auto insurance policy. What the most common numbers we see are 100,000, 300,000 of coverage. Now, what in the world does that mean? Well, it means that if there was one person or one vehicle in the accident, that the insurance company would cover up to $100,000 for the claim. If there was more than one person or more than one vehicle involved in the accident, then they would go up to a maximum of $300,000 for the claim. Now, this bodily liability portion is what protects everybody else. None of this coverage would protect you. This is just for other people, other vehicles. So hopefully I'm explaining that okay, and keep following along. So the next part of our coverage that we see is the property damage portion, and that's if your car damages somebody else's property. You hit their house, you hit their fence, you hit a tree, you hit their garage, something like that. Then this part of the coverage will be used to fix repair those damages that happen because of your driving accident. The next portion has to do with the part that protects you, the uninsured and underinsured. So if you get in the accident and you get hurt or your car gets damaged and the other people, it's somebody else's fault, and they don't have enough insurance or they don't have any insurance, then this would come and protect you and your family. So it matches the same as what bodily liability is, but this is for you. So $100,000 on one particular vehicle or one particular person, or up to $300,000 if there's more than one vehicle, more than one person involved. All right, moving on. So then another part of your policy is the medical coverage. So if you do get hurt in the accident, have to be lifelined, or you have to take an ambulance, or whatever the case may be, then this medical coverage would pay for the ambulance, the helicopter, the medical expenses, could help pay for the deductible of your health insurance to help pay for medical expenses. But this is a portion of your policy. Typically, we see that around $5,000 to $10,000. Then we get into talking about the deductibles. So this is how much you're on the hook first before the insurance company steps in to pay anything. So there are two different kinds of deductibles. The first one is the comprehensive deductible, and this would cover things like if somebody keyed your car, if a rock smashed your windshield, if you hit a deer, something like that. So something that doesn't involve another vehicle in the process, but it does damage to your car, and you're going to turn that in. So most people have this comprehensive deductible around $250 to $500, meaning that they're on the hook for the first $250 or $500, and then the insurance company would come in and pay some of the other values. All right, and then the next piece on your policy is the collision deductible, and this is if the claim involves another vehicle. So again, most people have $250 to $500 of coverage, and so they're on the hook for this much first, and then the insurance company will step in and cover anything. So what we want to do to just kind of bring this to life is let's just tell a story. Let's just say that you're driving down the road and maybe it's a little bit slick out. I'm actually looking out the window here. My office seeing is kind of gray and been a little bit rainy today. And maybe you're in a hurry and you're driving down the road and you slam on the brakes and wham, bam, bam, you cause a 5-car pileup. Unfortunately, you find out one of the cars is a BMW, one of them is a Mercedes, one of them is a Cadillac Escalade, and they were all seriously damaged. There were a couple people that were hurt. Someone had to be lifelined to the hospital. So here's our accident that happens. And the question is, how does this impact you? What will happen? The good news is in the accident, nobody was killed and everybody was able to be fully healed, fully recovered, and all the vehicles were able to be fixed and everybody's move on. But there are costs involved with that. And the total cost for the accident was $700,000. Now, how will that affect you? Well, the good news is you have auto insurance. And because there was more than one person and more than one vehicle involved, the bodily liability, which protects other people, it's not the 100,000, but it'd be the 300,000 would be covered. So the insurance company would write a check up to 300,000 to pay those damages. And the difference, $400,000, who gets to pay that? Yes, you guessed it. It would be you. Now, how would that impact your net worth or your savings or your retirement money if you had to come up with $400,000 to pay for all the damages in this accident? That could be pretty devastating to a lot of people. And that's why there's a lot of people that end up filing bankruptcy after accidents or medical incidents and things like that. So what we find is that this kind of coverage, just the way we've structured this coverage, which is very, very common, may not really be ideal for protecting you. And so we want to talk about what else could you do. So let's talk about how you could design the policy. We recommend that you raise the liability portion that protects other people to $250,000 per person or up to $500,000 per accident. So that is an increase from the 100, 300. So this would put you in a much stronger position if you had a claim. Raising the property damage up to 100,000 usually seems to be sufficient. And then if you're going to protect other people at 250, 500, we should protect you at 250, 500,000. Now, most people will say, well, Kurt, isn't this going to cost me more money? And the answer is, well, yes, you're getting more coverage than what you had, and you're going to pay some more. But hang in there. I'm going to show you some other ideas, and maybe we can help alleviate that extra cost. But we do like the idea of having extra coverage. Right, so the medical portion on your policy, I recommend raising that as high as the company will allow. Sometimes that's 25,000. Some companies will even go up to 100,000. You'll find when you see the prices for these coverages that this is a very inexpensive form of health insurance. So, maybe it's, I don't know, $10, $12, $15 every 6 months for this portion of your coverage is very, very inexpensive if you consider it's a form of health insurance, or maybe at least covers the deductible. If you have a high deductible on your health insurance, it might cover some of those expenses if you had a health injury during the accident. And then the last thing that we'll talk about is, if you did have, let's say you were in a parking lot and you, instead of putting your car in reverse, you put it in drive and you pushed on a gas and you went forward and you bumped into a light post. And lo and behold, it did $700 worth of damage to your car. The question is, you have a deductible of $250 or $500, so you've got to pay that anyway. Would you actually turn that claim in, or would you just find a way to pay it out of pocket? And most people will say, unless you're just, don't have any liquid savings at all, most people would say, I would probably find a way to pay it. And so we asked the question, well, how high would the claim have to be before you would actually turn it in? And the magic number seems to be $1,000. So, well, if it was $1,000, I'd probably turn it in. If it was less than that, I'd probably pay it. Well, whatever that number is for you, maybe it is $500, maybe it's $1,000, maybe it's $2,500. Depends on where you're at and how much liquid money you have set aside. Whatever that number is, that's probably the number you should have set as your deductible. So we recommend, again, the number we hear almost often is $1,000. So if you raise your comprehensive and collision deductibles to $1,000, that you'll notice is one of the most expensive parts of your total premium on your policy. So by raising this higher, where you're willing to foot some of the smaller claims, that actually lowers your expenses down. And that's a pretty big deal. We'll look at that in just a moment. So let's go back to our accident story. And let's say, how does this new structure help us? Well, we're on, the total damage was $700,000 for the people in the cars. Now the auto company is on the hook for $500,000. So that's good. Now there's only $200,000 for you to cover. Isn't that amazing? Right? So no more $400,000. Now it's only $200,000. Right? Well, obviously that's still not a great number. That still can be pretty devastating to people. But we're definitely moving in the right direction. Right? So let's talk a little bit about your home and how you put insurance on your home. Now, if you are renting, then you have rental. You potentially should have rental insurance. It works a little bit differently than this. I'm just going to talk about home insurance for now. Home insurance is typically determined by the insurance company. How much would it cost if your home burned to the ground, for example? How much would it cost to replace your home? Now, it's going to be, your coverage is going to be higher than what your house might sell for, because they first would have to remove all the debris, and that's extra cost. Then they would have to have an architect redraw the drawings, and that would be extra cost. And then they could build the home, and material costs might be higher today than what it was. And so this is the amount of money it would actually take to replace your home if it was totally destroyed. And then the amount of structure coverage is based on a percentage of this replacement value. And the property coverage is also a percentage of the replacement value. So those numbers are all determined by the insurance company. Now, they have a little bit of wiggle room in here. Sometimes they get out of whack over time with inflation, an inflation rider they put on there. But at least this is a general idea. What you can choose is, what is the liability portion? So if somebody got hurt on your property and sued you, how much liability protection would you have? And this is where, if we raised your auto to $500,000, we probably ought to raise your home liability to $500,000 as well. Okay, and then the medical coverage is there if somebody gets hurt. And we want to keep this as small as we can on your property. We do not want to give them incentive to sue you to claim and go after money on your home premium. And then the deductible can be, we try to say to match it to what your auto deductible is, of sort of $1,000, but this is becoming harder and harder to do anymore. So sometimes it's 1% of the value of your home. Sometimes it might be $1,500 or $2,000. Every company is a little different, but trying to just match it as close as we can to your auto is what we try to do. Now, by making all of these changes, a lot of times when we shop this around, we might see that you actually save maybe $100 to $300 a year. So you end up with more coverage, more protection for others, more protection for you, more protection in medical claims, more protection on your home for liability claims. And yet, because we've been willing to self-insure for the little things, it's actually an overall savings for you. Now, not always. Sometimes maybe it costs you another $100, $200 a year, but a very small cost to increase your coverage level. But a lot of times we do see savings if we shop around a little bit. Now, the question is what could you do with that savings to help this dilemma that we still have? And there is a third kind of policy that you can get from your auto and home insurance agent. It's called an umbrella policy. And obviously, an umbrella policy covers auto claims, it covers home claims, and it can cover any general liability. If you ever got sued for something, your umbrella policy could help cover that. Now, the smallest umbrella policy you can get is $1 million with typically $1,000 deductible. Now, some companies don't have a deductible. Some have a $500 deductible. It just depends on the company. But I'm just going to say it's $1 million policy with $1,000 deductible for now. All right. So how does this impact our accident story? So, I'm sorry, I forgot to tell you. A typical cost on an umbrella policy is about $150 to $200 a year. Now, about maybe a little bit more if you've got teenage kids at home, or if you've got 5 or 6 vehicles, it might be a smidge more. Maybe it's $250 or $300, but it's still pretty inexpensive. what you notice is that if we do end up with some savings by restructuring our auto home policies, many times we can add the umbrella policy for no money out of pocket. So we add this extra $1 million policy onto our current structure and may have no cost. Again, even if it ended up costing us an extra $100 or $200 a year, it's a very small cost, as you'll see, for the benefits that we get. All right, so let's go back to our $700,000 accident. And we see that the first $500,000 is still covered by our auto policy. And then the additional $200,000 is now covered by our umbrella policy. And so again, this umbrella could go up to an extra $1 million. So you'd have $1,500,000 total coverage between those two. That's a very, very big difference from where we originally started with just $300,000, right? And so the question is if there's $700,000 and $700,000 is covered by your insurance, is there anything that you have to pay? And the answer is yes. You would still have to pay $2,000 to cover the auto deductible and the umbrella deductible. But let me ask you a question. If you had a $700,000 accident, and would you rather pay $400,000? Would you rather pay $200,000, or would you rather pay $2,000 to cover the claim? Right? $2,000 is something we probably can recover from. $200,000 and $400,000, maybe not. So by just restructuring the way we have our auto and home insurance, bumping up our coverages, bumping up our deductibles to help us with the cost, and then adding an umbrella policy can really make a vast difference. Now, I hope you never, ever, ever have a claim and have to deal with this. But we do live in a society where accidents happen frequently, and we live in a very society where people love to sue, right? We're a sue-happy environment. So having some extra protection, I think, is a good idea, especially if the cost is minimal. Now, we have actually seen people save money. Our largest case, somebody saved $2,700 a year to actually make these changes on their policies. That's pretty crazy, but I've seen people save $500, $1,000, $1,500, $1,700 on making these changes. I'm not promising that you'll do that, but at least worst case, if you can break even, or even if it costs you a couple $100, I think you would be glad in the long run that you made these changes. All right, I'm going to stop talking. Hopefully this has been helpful. We learned some things. Please let us know if we can be of help. Again, I'm Kurt Berry with Stillwater Financial on behalf of 10X Prosperity, sharing ideas with you that you can build wealth differently. Have a great day.